Hey Bowtie Nation, Joseph Hogue here, and despite the recent sell-off in AI stocks, the upside to artificial intelligence is not over. Even as stocks like Oracle fall on canceled funding, others like Disney are filling the gap with new money into that AI future. But investors are ignoring an entire part of the AI market, one trading at a 44% discount that could double and still would be cheap. Even I've avoided this group of AI stocks, but the risk-return trade-off has just flipped, and I'm buying in. Nation, I've warned about holding Chinese AI stocks in the past because there was just too much political risk. The potential was there, but that risk of a crash on a tweet or some move by the Chinese government just wasn't worth the headache. That has flipped now though, first with the president's change to NVIDIA chip exports to China, along with other news that boosts the 5 AI stocks I'm going to show you in this video. These stocks not only have a 50% plus upside to target prices, but are going to help diversify your AI stock portfolio from sell-offs here in the US. Over the last month, all 5 of these stocks have beaten the US counterparts in that AI theme by 10 to 15%. Nation, this is not about throwing money at the Chinese government or about being un-American. Hell, I'm a patriot to my bones. I've served and I've fought proudly. The government doesn't even get a dime of that investment in stocks. In fact, neither do the companies. When you're buying shares of those companies, you're buying them from another investor. Or in the case of these Chinese stocks traded in the US, it's probably going to be another US investor. This isn't about any of that. This is about putting your money where it's going to work the hardest for you and for the highest return. Now back to that news that flipped this theme, and then I'm going to walk you through the analysis on those 5 stocks to buy. With the US ban on NVIDIA H200 chips to China now lifted, tech companies have a clear runway to develop their AI models. Before that chip ban was lifted, China just could not make the quantity or the type of performance in AI chips that they needed. They were smuggling NVIDIA chips out in suitcases, they were renting computer power abroad here. They just could not develop their own AI models without those high-performance chips from companies like NVIDIA and AMD. That's because even an older model chip like the H200 from NVIDIA is far and away better than the domestic chips by Huawei and 6 times more powerful than NVIDIA's previous chip available in the country. And further research shows that China's ace card in all of this could be its power generation that gives it an advantage in that build-out. Now, I've showed this graph of lead times in the US for power generation, how long it takes to build that necessary power to run some of the data centers to run AI here in the US. And we see even for these alternative energies like wind, like solar, where it's intermittent and then not the best type of power for data centers because it is not reliable. Those can take 3 to 5 years to put up, with regular power, traditional legacy power generation taking 5 to 10 years to produce. China's power generation advantage, though, is off the charts. From 2010 to 2024, China's power generation increased by more than the rest of the world combined. Add on top of that the $560 billion that Morgan Stanley forecasts China is going to spend in grid projects over the next 5 years. That's up 45% from the previous 5 years. It's going to produce 400 gigawatts of spare capacity. That's about 3 times the world's expected data center power demand at that time. And what we're going to see, this is all going to contribute to what OpenAI is now calling an electron gap, the advantage China has over this power generation to run its models, to train its models for that usage that is going to really boost the Chinese AI sector above and beyond the rest of the world. We can see here estimates by Morgan Stanley are that in the next 3 years, US data centers are going to face an electricity shortfall of 44 gigawatts. It's the equivalent of New York State's summertime capacity. That's a daunting challenge, they say, for the nation's AI ambitions. And it all hits home with this graph. Here you can see China now has 3.75 terawatts of power generation capacity. That is more than double US capacity. There's 34 nuclear reactors under construction, 200 other planned projects. You can see here the blue line down at the bottom here. US power generation has been basically flat for a decade or more, is just now starting to creep up with this AI data center theme. But China has gone exponential. That is going to give them an advantage in the compute power necessary to run these data centers, that model development, and then the usage. And in that theme, the actual use case for AI, we can see that China is already way ahead in its use of AI robotics. Installation of industrial robotics have doubled in the past 5 years in China. That is more than 9 times the rest of the world combined. Okay, almost 10 times the rest of the world. These dark factories across the country are run by just a few operators monitoring over screens. The rest is completely automated and robotic. And that rush to robotics and automation has helped China surge ahead in its manufacturing value added. Here we can see the chart, value added manufacturing by country, China versus the United States here from 2005. 2005, the US was up $1.6 trillion of value added manufacturing versus just zero point 0.6 trillion, so almost $1 trillion ahead. Since that time, the US has not necessarily flatlined, but has very slowed its pace of growth there, while China again has just gone exponential with these robotics and with that automation. So, nation, yes, that political risk is still there, but with a trade deal in the works and the US's reliance on chips from Taiwan and rare earth elements controlled by China, the odds of a real market crashing flare up are becoming next to nil. Chinese AI and tech stocks trade for a price of just 24 times their earnings. That is 44% cheaper than the tech stocks in the NASDAQ QQQ Trust. These growth stocks I'm going to show you now are just too cheap to ignore. And first up, shares of Alibaba Group, ticker BABA, up 74% so far this year. This is one that I have recommended in the past. We were there about $70 to $80 there a couple of years ago, sold out about $120. This is one that jumps around quite a bit with those geopolitical risks as well as just risks there in China with the tech stocks. But you can see this has made a breakout up to past $189, almost to $190 this year before that sell-off over the last couple of months. Chinese tech stocks have gone through that sell-off just as the US stocks have here in the US over the past couple of months. It hasn't been quite as bad, and these stocks are deep into value territory. And within these, what I want to do, I want to look at the analysis and the stats compared to some of their US counterparts, and you're going to see the growth is there just as well as some of the US tech stocks, and at a much cheaper price than some of the US counterparts. If we go here to the analysis tab on Yahoo Finance, we can see growth here for Alibaba. Not quite what it is for a lot of these other stocks that we like to look at. Growth of revenue growth expected just 4.7% this year, 10% next. I think they beat that. This is in yuan or Chinese yuan here, so 1 trillion Chinese yuan. That's about I think you divide by 7.2 to get the US counterpart there. So if we divide 1040 trillion divided by 7.2, be about $144 billion. So very strong revenue base there. 4 or 5%, I think it grows much faster than that as they start using this model and develop more of their cloud services around this model. And where I really like these stocks is in the valuation. We can see the price to sales valuation here, 2.45, about 2.5 times for shares of Alibaba. That means you're paying about $2.45 for every dollar in shares in sales they recognize. Okay, so about $2.5 for every dollar in sales recognized. You can compare that to some of its US counterparts. Probably best comparison here is Amazon, trading 3.5 times. Okay, so if we look at that, shares 2.45 divided by 3.46. So shares of Alibaba are trading for a 30% discount versus shares of Amazon on that price to sales valuation. Now, I do like shares of Amazon here. I think it is one of the best positioned AI companies. Not only is it the leader in e-commerce, the leader in cloud services here in the US, but it also has a great model. It's producing those Trainium AI chips that are going to take some market share from NVIDIA. So it's got a lot of things going for it. I do like shares of Amazon here, but you cannot ignore the valuation discount you get on shares of Alibaba and some of these other stocks I'm going to talk about. Now I'm going to show you those other stocks I'm buying, but if you've ever wondered what's in my portfolio or just want to see all the stocks I'm buying, you can now by joining me on the Blossom Social Investing app. This is the app we've been waiting for, created for investors by investors. I've been using it for 2 years and love the app for getting ideas and sharing my own portfolio. Now here you can connect your brokerage account or just input all your portfolio to track all your stocks in one place. You're going to see insights like portfolio percentages and average dividend yield across all your stocks. You'll also be able to join more than 500,000 investors in the social feed to see what everyone is talking about. Now, I've shared my portfolio on the app. It's totally free to download, so look for the special invite link I'll leave in the description and check that out. Here, also in the cloud services theme, Kingsoft Cloud Holdings, ticker KC. This is an ADR, so most of these are traded on the US exchanges. You can buy them right here in the US. Though this is a cloud services platform, so all of that compute power, all the data centers building, those are cloud services for the most part. This Kingsoft, it's like kind of like a CoreWeave, okay? It builds the data centers, it rents out that cloud services space, that compute power. So it is a prime beneficiary of this AI theme. We see here in the analysis just the kind of growth we like to see in these growth stocks. 23% revenue growth expected this year, 15% next. I think it beats that expected sales if that AI theme keeps going, especially with this availability of H200 chips from NVIDIA. They're going to be able to really boost the performance of those cloud services, of those data centers, and get more revenue growth there. But $11 billion revenue expected next year there in 2026. And here in the valuations, we see that same huge discount here, trading for 2.2 times on a price to sales basis. Okay, again, this is about $2.22 you are paying for every dollar in sales booked by this company. So if you compare that to maybe some of the other cloud services or the data center companies here in the US, we'll take CoreWeave, ticker CRWV, as an example, trading for 7.5 times its price to sales. So 7.5 times, you are paying upwards of more than 3 times for shares of CoreWeave as you are this Kingsoft. So that was 2.22 divided by 7.46. This one there, you are getting Kingsoft for a 70% discount, okay? 70% discount in shares of Kingsoft versus that CoreWeave. Growth is there at 23% this year. It's a very strong value stock right there in China AI theme. We're going to get right back to these stocks to buy, but I want to hear from you too. So in the comments, let me know if you're investing in Chinese stocks and which ones you're looking at, which ones in this AI or tech-based theme. Also, if you found this research useful, please consider tapping that like button. It helps get the video out to more people, and I appreciate it. Another one of the largest tech companies there in China and very strong in this AI theme, shares of Baidu, ticker BIDU, up 42% so far this year. You can see here in a presentation by Baidu that it is going all in this AI theme. Okay, third quarter revenue up 50% from last year in that AI-powered theme. R&D, almost half, more than half of the company's total workforce is in that research and development. Okay, it is number one in the number of AI patents and patent applications in China, really trying to lead in the AI models, in the AI agents. We come down here, the AI infrastructure. It is the leading AI cloud infrastructure in China. Again, selling those cloud services, providing those cloud services revenue. AI cloud revenue for the company up 21% a year over the past, 128% year-over-year growth in its subscription, in its AI accelerator infrastructure subscriptions there. And just like US companies like Amazon and Meta are using AI in their marketing, in their advertising for that growth, so is Baidu here. AI native marketing services up 262% year over year. So this is amazing growth within its digital humans, within its agents programs here for marketing services. And here, because of the weakness in some of the other segments, analysts actually see the company losing revenue growth this year, down 2.8% for a negative revenue growth this year, but then popping back to 5% next year. Again, once they get a handle on these AI agents, the marketing, the cloud services, I think they beat that. I think, again, this new exports of H200 chips from NVIDIA really helps boost the data center capacity there in the country, helps them grow this by at least high single digits as far as revenue growth, and really get a handle, grow that earnings per share as well. Here in the valuation statistics, very similar to what we saw with those other two companies, about 2.2 times on that price to sales value. Now, some of this is because of that lower growth expected. So I do expect when we see new growth targets updated for the companies, I think this valuation comes up to maybe 2.5 or 3 times price to sales. So not only are you getting faster revenue growth, but you're seeing that investors are going to be paying more for that revenue growth. Now I'm going to show you 2 of my favorite ways to invest in this theme next. ETFs that give you all the upside, but then protection to the downside as well. Even in this idea that China AI and the recent dip in US tech stocks doesn't mean I'm giving up on AI here at home. In fact, check out this video in the corner or linked in the description next for proof that we still have from 12 to 18 months left at least in that AI theme and the stocks I'm buying on this dip. And first up in those ETFs, the Invesco China Technology ETF, the ticker CQQQ. This is going to be very similar to the NASDAQ QQQ index that we have here in the United States, really following the tech stocks there in China, the largest tech stocks in China. We can go to the homepage here on Invesco for the China Technology ETF, that CQQQ. See that it invests at least 90% of total assets in the companies as well as the ADRs. What I like about these, it gives you exposure to a lot of those Chinese tech stocks that aren't necessarily available on the US markets as American depository receipts. Okay, so those shares of Baidu, those shares of Kingsoft, those shares of Alibaba, you can buy those on the US exchanges. A lot of tech companies, though, not available there. So it's going to give you access into the FTSE China Index, into the China A shares, into the B shares there as well. And you can see if we scroll down here, it holds 156 companies there in that tech space. 24.5 times price to earnings ratio. Okay, so a price, you're paying about $24.59 for every dollar in earnings reported by those companies. And if we compare that with the stocks, the tech stocks in the Invesco QQQ Trust, so those are the tech stocks here in the US, that NASDAQ 100 index, we can see the price to earnings ratio, 43.3, almost 44 times price to earnings ratio. So if you compare that price to earnings ratio for those tech stocks there in China, 156 tech stocks, 24 divided by that 43, 24.5 divided by the 43.3, you are getting a 43% discount, almost 44% discount buying these tech stocks here in this China Technology ETF versus the tech stocks here trading in the US. If we click here to portfolio, we can scroll down here and see all the holdings in the company. You see the top 10 here, and then you can view all with these. But this is a great way to not only see what's in the ETF and see what you're buying with this, but you can also see the percentages of each. So you can see Tencent is 10% of this ETF, but you can also kind of mine these ETFs to see what other individual stocks you might want to buy. Okay, so we can see it's got Baidu in there, it's got PDD Holdings, Tencent, it's got Bilibili there. So a lot of these, if you want maybe more exposure into these particular companies, you can buy those individually, or you can buy this ETF and get the 156 stocks all in one fund. Another option here would be the CraneShares CSI China Internet ETF. Okay, so this is going to include a lot of the cloud services, a lot of the internet stocks that are maybe a little bit more focused here in this AI theme. You see there it's up 24% in the last year. Here again, we can go to the ETF website here and see the overview on it. It's going to consist of China-based companies whose primary business or businesses focused on internet-related technology. Okay, so you can see it's going to give you access to the China-similar companies of Google, Facebook, Twitter, all the Chinese equivalents of those. Scroll over here to the holdings, and you can see it is very similar to the other one in that the tech stocks are going to be a lot of those internet stocks, but you are going to see some differences here comparing the two. Tencent, Alibaba is the second largest holding in this. We saw in that other ETF, Alibaba is in there, but not nearly to this weighting. We also see PDD. We see NetEase, which wasn't in the other ETF at this size. So you've got a lot of the same stocks, but a much larger percentage exposure to them. So if you want a little bit higher percentage exposure to internet stocks, to really this core AI theme that we're looking at, this CraneShares CSI, the CraneShares KWEB, probably be your better option here. Join me on the Blossom app with a special invite link below to see all the stocks in my portfolio and what more than 500,000 investors are talking about. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.